Hello, everyone. This is Justin Smythe from nextbigtrade.com. This is your focused watch list for January 5th, 2024. With the overall market turning weak and likely remaining in correction, the opportunity on the long side is very minimal right now. And due to that fact, this week's focused watch list is going to focus on some potential short setups because, again, the overall market is now a headwind while it's in correction and it's hurting most individual stocks. And what we want to focus on in terms of shorts are sectors that performed poorly during the recent rally, with the idea being that they would likely be under more pressure when the market's in correction because they were basically unable to rally much while the overall market was healthy. So the weakness that they show during the rally, can lead to even bigger weakness when the overall market's trending lower. So starting out this week is Tesla, and really a couple big problems with this stock is during the recent rally, it was unable to get above the September, October highs and unable to get back above the previous uptrend highs from the May, July rally. That's a warning sign. You can see that the relative strength down here against the S&P 500 is actually rolling over right as the market, started to top out at the end of the year. We could easily break through below support and below the key moving averages here, and then the stock would basically be in a downtrend. So this is a kind of a short setup. If it continues to break down here, and Tesla being a widely followed mega cap stock, this is going to be a liquid way to play downside with no takeover risk. One of the problems with the auto sector in terms of shorts is that some of these stocks are so destroyed that they could be takeover candidates, which wouldn't be a good thing if you have a short position in a stock that's about to bounce from a takeover. But there's a lot of really poorly acting stocks in the auto sector, which is why it's a good target for shorts right now. On the daily chart, Tesla is again back to that 30-week moving average, sitting there right at support. So you've got a clear breakdown if it continues to follow through lower, as a signal to bet against the stock that it's heading into a new downtrend. Rivian is another major auto manufacturer that recently gapped lower this past week, and volume would have been above average if it was a full trading week. On the daily chart, you can see the gap lower. You can see how it's sold off all week. This one might be due for a little bit of a bounce, which would set up a better place to short, especially against the recent gap area, and then look for the stock to continue lower after that. And again, the entire auto sector is acting extremely weak right now. The final auto related stock, this is actually kind of a semiconductor related stock as well, and even AI. But again, everything's kind of acting weak in the auto related sector. AMBA, you can see how this one just incredibly weak all year. No big volume anywhere, actually big sell volume a couple times. Wasn't able to do anything during the May 2023 rally. Didn't do much during the October to December rally. Never really saw any big upside volume. Underperforming the S&P 500 the entire time, and then rolls over to start the week this week below the 10-week moving average. Basically, this is already in shortable position here. Dropping down to the daily might be a better entry if it rallies back towards the 20-day moving average early next week. But overall, still potentially starting a new downtrend here. You can see how it topped out in December when the S&P 500 was rallying strongly. This thing just could not go anywhere to the upside, and now we're starting to roll over as the market is acting weak. Now, the other sector that has acted extremely weak during the recent rally is the agricultural inputs sector, and these stocks are tied to soft commodities, which a number of them have acted really poorly recently as well. Corn, I think, is making new lows as of this week, and I think soybeans broke down as well. So soft commodities acting bearishly. You can see how this thing did not rally at all really during the recent rally, with no volume coming into it. It's underperforming the S&P 500. It's already been in stage 4 for a while here, but there's nothing bullishly, happening on this chart. So vulnerable to another stock market correction here. On the daily chart, you can see how it's just gradually rolling over here. You'd probably want to see it break below these moving averages, obviously get below this recent gap in November. If it closes that on heavy volume, that's basically a sign that this is ready for another down leg. The other stock is MOS. This one's, I think, acting a little bit weaker, might be a little bit better of a setup, but you've got clearly defined support here that I could break down below. Virtually no volume again on the recent rally. And on the daily chart, you've got some heavy volume selling days showing up here on the daily, especially at the end of the week last week. And not much support. So if we can get down through the support here, we're trending lower with no support. And the sector really is configured bearishly. Pretty much all the stocks are trending lower at this point. So these are two very weak sectors to target for shorts. And again, with the overall market providing little opportunity, there might be a little bit more opportunity on the short side. Shorting does carry more risk and it's less profitable. So another strategy is always just to remain patient, wait out the correction, and look for new long opportunities as well. That's a great strategy to have during corrections as well. So either way, look for these for potential shorts as we move through this correction.